MAA stock, Mid-America Apartment. This stock is down almost 25% year to date, while the S&P 500 is down 18%. So that's quite a difference. But the reasons why investors love MAA stock is because of the dividends. They pay a 2.9% dividend yield, which is very attractive. But how about the returns of this company? In this video I'm going to show what MAA does, a view at the historical returns, the fundamental analysis and the dividends to see if MAA stock could be an interesting buy right now. I'm very excited to see what you guys think about the stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. MAA is a real estate investment trust engaged in the acquisition, operation and development of multi-family apartments communities primarily located in the southeastern and southwestern United States. The company derives nearly all of its income in the form of rental revenue from leases. In the latest report we see a few key numbers. They are publicly traded for 28 years and a S&P 500 member. They have over 100,000 apartment units and $1 billion full year pipeline for 2022. Next to that they have an A credit rating, which is of course very important and looked good to me. One of the most important numbers here is the 14.4% 10-year annual compound return. MAA has a steady annual core fund from operations growth, as we see in this graph on the left. This is of course very important for a REIT. On the right we see that the compound annual return for the shareholder is significantly higher than the average peer, including AVB, CPT, EQR, ESS and UDR. They got beaten in every period by MAA, so that's quite nice. One of the things I really like about Mid-America Apartments is the fact that they have great diversification. 48% of the portfolio is within the inner loop, 41% is within the suburban and 11% is located downtown. Diversification in price point also looks really good to me. A plus and A is representing 38%, and the biggest focus is A minus to B plus with 54%. B and B minus represents only 8%. Another thing that I really like about MAA is the fact that the average physical occupancy is at 95%, which is very nice. And with that being said, I think we know a bit more about Mid-America Apartment. So let's continue with analyzing the stock, starting off with the historical returns. I decided to include the S&P 500 as a benchmark of the market. And I know a REIT and the S&P 500 are quite different, but you get an easy 10% return in the long run with the S&P 500, so that's why I'm using this one as a benchmark. Next to that I decided to include AVB, EQR and ESS. On the 5-year chart we see that MAA did return almost 100% including dividends, while the S&P 500 had a 74% return. AVB is at 21%, EQR is at 27% and ESS is at only 17.5%. So only MAA stock did beat the S&P 500 while the others underperformed the S&P 500 and MMA stock big time, including dividends. On the 1-year chart we see that MMA had a minus 4% return, while the S&P 500 had a minus 6% return. EVB and EQR are both down almost 10%, while ESS had a minus 15% return. On the 6-month chart it's looking quite interesting. All stocks did underperform the S&P 500 and are down pretty similar, between a minus 70% to minus 20%, while the S&P 500 is at minus 12%. On the 1-month chart we see that all stocks are up, but MMA and the S&P 500 are up both the most. So is this the perfect time to buy MAA stock? Let's find out by checking the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to receive similar analysis to this one every week, and also don't forget to like this video. Let's continue by diving into the fundamentals. Mid-America Apartment is a 19.6 billion market cap company with a 12 trailing month revenue of 8.83 billion. And in this graph we see that the revenue went up quite nice and steady, so that looks really good to me. But when we check net income, we see that it went up and down quite a lot, so make sure to keep an eye on that number. Right now profit margin is at 32.7%, which is very nice, especially since it's higher than the 5-year average. Although it seemed very nice, keep an eye on the net income pattern that I just showed you. Next up is the balance sheet. Total cash is at 60 million, but operating cash flow is at 926 million. Leverage-free cash flow is at 786 million. You want them to have enough cash to pay a big chunk of their total debt. But since MAA is a REIT, it's a bit different, since REITs have higher debts in general to grow the business. Right now, total debt is at 4.5 billion, and although it seems like a lot compared to the cash flow statement, I think they will do fine, since this is used to grow the business, of course. Especially since free cash flow is growing at a nice and steady pace, as well as the FFO, that I just showed you earlier in this video. So this looks really good to me, because free cash flow is used to pay down debt, of course, but also to buy back shares, pay dividends, do acquisitions, and reinvest in the business. Again, it's a bit different with REITs, but overall it looks really good to me. Next up are return on assets, which is sitting at 4.1%, which seems a bit low. Return on equity looks very good at 10%, and return on invested capital also seems a bit low at 5.3%. But keep in mind, this is the REIT. And the thing that I really like here is that return on invested capital is significantly higher than the 5-year average, so they do a good job here. Next up are the dividends, the part that people love about MAA. Dividend yield is at 2.9%, which is very nice. They have an annual payout of $5 a share, or $1.25 each quarter. Since MMA is a REIT, the payout ratio doesn't really apply here. Based on the 12 trailing months of earnings, payout ratio is at 96%. But based on this year's estimates, it's at only 60%, and based on cash flow, it's at 52%, so this looks very good to me. The 5-year growth rate is at 5%, which isn't a lot, but at least it's growing, so that's the good part. They grew the dividends for 12 years in a row, which is pretty nice. My final conclusion on this stock is that I really like the diversification and FFO growth. They have a proven track record which comforts me a lot, and dividends look very attractive to me. Based on what I see, I think MMA stock could be a solid dividend payer and even beat the S&P 500 in the long run. So I will definitely add MMA stock to the buy list, and whenever the time is right, I will start doing some more research and maybe buy this stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor, and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.